I would like to call the meeting to order. As a reminder, please note that board meetings are being recorded for the convenience of those unable to attend this video conference. A recording and closed captioning will be posted to the BERS YouTube channel following the meeting. Alex, can you please call the roll?
Sure. Calandrella. Isaac Carmignani.
Present.
Janelle Chacon.
Present.
April Chapman. Deborah Dillingham. Natalie Green Giles.
Present.
Michael Kraft.
Present.
Vanessa Leung.
Here.
Gary Linnon.
Present.
John Maderick.
Present.
Donald Nesbitt. Lindsay Oates.
Lindsay's on mute. Can't see it.
Yeah. Lindsay, can you hear us?
See her.
Yeah, it appears that Lindsay Oates is on the conference, but she seems to have her sound on mute.
Can you hear me?
Yes, thank you.
Thanks, Lindsay.
Lori
I had to have them
Podveska.
call my phone, so I don't know if that's what, anyway.
It seems to be working. It seems to be working.
Okay.
Lori Podvesker and Shannon Waite.
Okay. All right, we have a quorum. The first order of business is calendar item number 1, noting of the minutes of the meeting of the Board of Education Retirement System held on February 26, 2020. The minutes have been previously provided to the board via the SharePoint site. May I have a motion to consider the minutes from the February 26th board meeting? Gary, and a second. And I can't see everybody. I can only see select few.
I'll second it, John.
Okay, thank you so much.
That's Isaac.
Correct.
Thank you.
John, you should change your view so that everybody comes up.
How do I do that?
Jason, can you talk them through that?
But you know, some people are only on voice, though. I think. No, the trustees should all be on video. Trustees should all be on video.
Hey, John, if you go to the top right corner,
Right.
and you want to look for grid view, there's a little not
No, it's
badge in the top right corner.
Because it's so overcrowded, everyone has it's a Navy ship, hospital ship, yeah.
It's in the top right corner of the viewing screen. Which picture is?
Downstairs? Oh, geez, scared me.
There's 2 little circles.
Okay.
It's the left of the little circles. If 2 little circles, and when you hover the cursor over the left circle, it's going to give you 3 options. It's the option on the right.
Okay, let's see what I got here. It's the...
Can I please ask everyone when they aren't talking to please go on mute?
Lecture?
I don't see it.
Well, you know what we can do is just when anyone is going to move, make a motion or second it, just announce yourself as you do it.
Yeah, I think that's probably the best bet. Okay. So we got a second. Please, we're going to do a verbal on approving.
Yeah, my recommendation is to ask for verbal approve, ask for any abstentions, and then ask for any no's. And then if we get abstention or no's, get details on who they were.
Okay. All right. Okay. So please announce if you vote to approve the minutes. I do.
Approved. Yes. Lennon.
Isaac
Can I make a
approved.
suggestion? Is it possible that we just call the roll of those of us who are here and then it's just a yes or no? I think that'll
Sure.
be more efficient.
Sure, I will go
Yes.
ahead and do that. Okay, so John Maderick,
Here. Yes, I approve.
Gary Lennon,
Yes.
Janelle Chacon,
Yes.
Isaac Carmignani,
Approved.
Lindsay Oates,
Approved.
Michael Kraft,
Abstain.
Natalie Green Giles,
Yes.
Shannon Waite,
Yes.
Vanessa Lang.
I'm abstaining.
Okay, so that was everybody? So we don't need to disapprove? We're all good?
We
Abstentions?
have
So
one abstention,
I think it was 2.
Vanessa.
Two.
Vanessa and Michael?
Michael Kraft abstained.
Okay, the motion carries. Next item on the agenda is the executive director's update. Sandy, would you like to share any remarks with us?
Sure, I'll try to keep it brief. Thank you for everyone attending. Our crew plan contemplated a 30 to 90 day period where we would have absolutely no activity going on. I have to say that we have done profoundly better than that. We continue to retire and transact membership loans and other transactions. We continue to counsel members. We continue to communicate with members, although with some limitations, which I will talk to briefly. Velocity remains on schedule. We were lucky. In the plans to transition to 55 water, we had contracted with Citrix for remote desktop, so we were able to enable 100% of our employees to remote desktop in about a period of 48 hours. Unfortunately, only about 70% of our staff have equipment to facilitate easy access to Citrix. We had a number of laptops on order, but therein is one of our first problems. Dell has announced an indefinite delay in delivery of laptops. We fall down the list of priority customers. We will get about 10 laptops delivered this week from Lenovo, so we will continue to improve our percentage active. We've had some call center issues related to struggles with equipment for our call center individuals and software, and some support issues as we try to activate our remote call center. The last I heard, it was reactivated this morning, but we're having a fairly significant influx of calls, and we're not able to handle the full brunt of those yet. We've changed the announcement to try to divert the call center announcement to try to divert some calls to email, but we're still struggling a bit with that. Citrix, you have to understand that the whole world is turning to Citrix remote desktop, so we're seeing some difficulties in Citrix handling the sudden demand load, and we're seeing slowdowns and some disruptions. But we're working to get around that. I credit IT for keeping up with that. Some staff are pretty anxious about their inability to work remotely. I would tell you that city guidance has given us sufficient leeway to protect them in the interim. We believe we'll get equipment to these folks, and we will believe we can keep them employed and productive. Our investments, you'd have to understand that our investments are getting buffeted by market volatility, but we are well diversified, and our investment book of record system is demonstrating its value to us. Antonio and his staff will be talking a little bit about that later on in the board meeting. Let me just end up saying that under these circumstances, you see who the standout contributors are. And I'd have to tell the trustees that we have a lot of standout contributors in our organization. They've done an excellent job. And with that, back to you, John.
Okay, thank you, Sandy. The next item on this evening's agenda are calendar items 2 through 17, the ordinary business of BERS. Is there a motion to consider calendar items 2 through 17?
Michael.
In a second?
Peter Calandrella, I'm here. I don't know if anybody can hear me now.
We hear you.
Thank you.
I can hear you, Peter.
Was there a second that I missed?
Neil second.
Okay, we will now vote on these items. So Alex, are you gonna call out everybody's name every time we do
Yeah,
this?
sure,
Okay.
yeah. John Maderick,
I approve.
Gary Lennon,
Approved.
Janelle Chacon,
Approve.
Isaac Carmignani,
Approved.
Lindsay Oates, Lindsay, can we have your vote, please?
Approved.
Thank you. Michael Kraft,
Approved.
Natalie Green Giles,
Approved.
Peter Calandrella,
Approved.
Vanessa Leng. Sorry, I don't think we heard you, Vanessa.
Approved.
Thank you. Shannon Waite.
Approved.
Did I miss anyone?
I don't think so. So there's no opposed and no abstentions? Then the motion carries. Next item on our agenda is calendar item number 18, authorization to enter into an agreement with the Corporate Essentials LLC to provide water filter maintenance services to the Board of Education Retirement System. Can I have a motion to consider?
Considered. Gary.
A second?
Michael seconds.
Okay, this is an agreement for water filtration services for our office space at 55 Water Street. The value of this agreement is not to exceed $10,000 over the next 3 years. That's from April 1st, 2020 to March 31st, 2023. Are there any questions from the board?
It's Natalie, not to state the obvious, but there is no water being delivered in March, so does it matter? Does the contract stand as is, or can the terms of the contract be pushed to a more realistic start date?
Right.
We can make an amendment to the contract. I think that at this time, though, it's a little difficult to know exactly when things will return to normal. We have some estimates, but this is going to be one of those big picture issues. If the board wishes, we can right now resolve to authorize BERS to enter into a contract beginning and ending at later dates. That is something we could do right now. But I couldn't tell you for sure when we will truly be able to return staff to the space. If you wish, you can lay this item over. It is no longer urgent.
This is Gary, I just think in general, and something I'd want us to be able to have a dialogue about is, this is across the board, like what expenses are we minimized or mitigating in the reality of where we currently are? Like if we don't need to spend something, I imagine we're all being fiscally responsible of not having to spend. And so this contract, if that means that it's not, if it's not critical, I'd definitely prefer to go ahead and do it.
Even if authorized, Gary, we would not be spending anything on the contract until they actually begin delivery in any event. But if the board prefers, the whole contract can be tabled, or you can authorize a later beginning date.
This is Michael.
Sorry, go ahead, Michael.
I'm sorry. No, I'm comfortable authorizing a later date and leaving it to the discretion of the team when that date should be. I'll trust them to do that. That's just my own opinion.
Okay, does everybody agrees with Michael?
Peter Calandrella, I would agree with that.
Agreed, Gary.
Yeah, I'm agreed. I agree, Natalie.
Yeah, Isaac, same here.
Okay,
Agree. This is Shannon.
okay.
Neil agree.
Okay, so the vote is going to be that we approve this contract to start when BERS occupies 55 Water Street, correct?
Yeah.
Okay.
Sounds good.
Okay, Alex, we're gonna vote now, so I guess it's gonna be an all in, whoever's in favor, and you're gonna call roll now, right?
I'm sorry, still on mute. Gary Lennon,
Agree.
Janelle Chacon, Isaac Carmignani,
Agreed.
Lindsay Oates,
Agreed.
Michael Kraft,
Agreed.
John Maderick,
Agreed.
Natalie Green Giles,
Agreed.
Peter Calandrella,
Agreed.
Shannon Waite,
Agreed.
Vanessa Lang,
Agree.
I can't get on now. Hello?
Oh,
Hi, has someone joined?
Been infiltrated.
all right. So that was an all in favor, correct, Alex?
Yes.
So being no opposition or abstentions, the motion carries. Next item up is calendar item number 19, authorization to enter into an agreement with eVestment to provide a public market investment manager database. Can I have a motion to consider?
Consider.
This is Shannon.
Gary.
I move to consider.
And a second?
Janelle, second.
Okay, I don't see, I guess Antonio's here. Antonio,
Yeah.
can you tell us about this?
Absolutely. And can everybody hear me?
We can.
Yes. Perfect. So as Sandy kind of described at the beginning during his executive director's comments, we've started to integrate the investment book of record platform. And I think it's going to be showing its worth both today and through the memos we sent to you all and the enhanced reporting that we're hoping to bring online in April. This database, we actually tried to get access to it in numerous ways. And hopefully in the future, we'll be able to get access through our general consulting contract in the future. But right now, this really allows us to integrate a ton of data into our selection and monitoring process. So the contract for 1 year. And then, like I said, we're hoping that through the RFP process, it will be just part of our package through our general consultant search. And I'm happy to answer any questions.
Okay, any questions for Antonio?
Yeah, this is Shannon. Sorry, I can't seem to find it in the packet that was sent. I don't know, too much scrolling. How much is the contract for?
Not to exceed $19,950.
Thank you.
Are there any other questions? Okay, so let's vote. Alex, please call for an in favor vote.
Gary Lennon,
Yes.
Janelle Chacon,
Yes.
Isaac Carmignani,
In favor.
Lindsay Oates,
In favor.
Michael Kraft,
In favor.
John Maderick,
In favor?
Natalie Green Giles,
In favor.
Peter Calandrella,
Approved.
Shannon Waite,
Approve.
Vanessa Lim,
Approve.
That's everyone. Alex?
that's everyone.
Okay, being that there was no opposition or abstentions, the motion carries. Next item on the agenda is calendar item number 20, adoption of the actuary's determination for the preliminary fiscal year 2021 employer contribution to the New York City Board of Education Retirement System. Can I have a motion to consider?
Consider.
Natalie.
Gary.
Second, Natalie.
Okay, Sherry, if you're there, can you tell us about this resolution?
Sure thing. So hopefully everybody can hear me. Maybe you can wave if you hear me. So I know. If not, I guess I'll be told that you can't hear me. But so the employer contribution for the next fiscal year was calculated.
Sorry, it's Natalie. I'm having trouble hearing you, Sherry. Speak louder or into a microphone.
Okay. I don't know if I can speak louder. Can we better now? So the employer contribution for the next fiscal year was calculated to be 230.3 million approximately. And this amount represents a decrease of 42.4 million This decrease was due to the previous change in the actual valuation method for the TDA fixed fund that we have spoken about in the previous board meetings. So there is a resolution for adoption, and I'm happy to answer any questions anybody might have.
Okay, does anybody have questions for Sherry?
No.
Okay, being none. Alex, we're going to call in favor vote.
Okay, and can we note that April Chapman has joined the meeting? Welcome, April.
Thank you.
So I'm going to call for aye votes, or I'm going to roll call each trustee and ask for your vote. April Chapman,
In favor.
Gary Lennon,
In favor.
Janelle Chacon,
Favor.
Isaac Carmignani,
In favor.
Isaac, I couldn't hear you. I don't know if.
In favor.
Thank you. Lindsay Oates,
In favor.
John Maderick,
In favor.
John Maderick,
In favor.
Michael Kraft,
In favor.
Natalie Green Giles,
In favor.
Natalie Green Giles.
In favor. Can you hear me?
Yes. Peter Calandrella,
In favor.
Shannon Waite. Shannon, you're still on mute?
Sorry, I was muting so that you didn't have to hear whatever this is, Pete the cat. But yes, in favor.
Thank you. And Vanessa Lim.
In favor.
Okay, Alex, there were no opposition or abstentions, correct?
None.
Okay, the motion carries. Next item up is calendar item number 21, adoption of the actuary's fiscal year 2019 reimbursement calculation resulting from Chapter 41 of the laws of 2016. Can I have a motion to consider?
Michael.
And a second?
Shannon.
Sherry, can you tell us about this resolution?
Yes, so this law was passed back in 2016, and it gave members the opportunity to purchase their military service regardless of where or when it was performed. Previous to this law, the members could only purchase military service if it was performed and at specific. So so what happens is this contribution. So when a member purchases past service for military service to be applied for pension, they pay a certain portion based on what their salary is, a percentage of their salary, and then the employer pays the rest of the cost. These contributions are included in what the city and the employer pays into BERS each year. So this resolution just directs the executive director of the retirement system, which obviously is Sandy, to go to the state to ask for this reimbursement because the state's supposed to be paying back the city. So for fiscal year 19, there were 13 members who purchased a total of 29 years of service. And after taking into consideration the amount they paid, the employer contribution was $445,000 approximately. There also is a resolution here that, again, directs Sandy to seek this reimbursement back from the state.
Okay, thank you, Sherry. Are there any questions from the board?
And I guess the other note is that, this law that passed in 2016 to current, the state has actually, despite the city having asked for the reimbursement, the state has actually not reimbursed the city back for this amount. So cumulatively for these 4 fiscal years for BERS, this amount without interest is about 1.5 million.
Okay. Thank you, Sherry. Are there any questions for Sherry? Okay, then let's vote. Alex, please call an in favor vote.
April Chapman. Sorry, you're still on mute, April.
In favor. Thank you.
Thank you. Gary Lennon,
In favor.
Janelle Chacon,
In favor?
Isaac Carmignani,
In favor.
Lindsay Oates,
In favor.
John Maderick,
In favor.
Michael Kraft,
In favor.
Natalie Green Giles.
In favor.
We couldn't hear you there.
In favor.
Thank you. Peter Calandrella,
In favor?
Shannon Wade,
In favor?
and Vanessa Lang.
In favor.
Thank you.
Thank you, Alex. Being there were no opposition or abstentions, the motion carries. Next item on the agenda is noting receipt of the fiscal note report and Older Workers Benefit Protection Act report. Can I have a motion to discuss?
Motion.
And a second?
Gary.
Okay. Michael and Gary as a second. So Sherry, can you please tell us about these reports?
Sure. First of all, the fiscal note report is for public session. The Older Worker Benefit Protection Act report is for attorney-client. So I'm happy to talk
Sherry, I'm sorry. This is Shannon. I can't hear you. I need you to lean into the mic.
I don't know if this is better, but so the fiscal note report is for public session, and the Older Workers Benefit Act report is for attorney-client. So I'll be happy.
Can we have a motion to enter attorney-client, or well?
I can speak about the fiscal note report first.
Okay, go ahead and do that, and we can do it. We can do it at the end of the meeting.
So for the month of March, since the last board meeting, end of February to mid-March, there was one fiscal note that affected BERS, and this was a bill that permitted employees who were honorably, other than being honorably discharged from military service, to purchase back their military service. And this was, because we don't have the statistics of how many members this pool would potentially be open to, we did price this on a per person basis based on the Chapter 41 of 2016 data that we have. And assuming a per person basis, we looked at the data, and each person purchased about 2.5 years of service. So they would be the contribution increase due to each person purchasing this average year is $5,100. So it'd be an increase in employer contribution of $5,100 per member that decides to purchase 2.5 years of service. So that was the only fiscal this past month pertaining to BERS.
Okay, thank you, Sherry. Are there any questions for Sherry on this? Okay, thank you again.
You're welcome.
Okay, next item on the agenda is a portfolio update from Michael Wright. Is he here? Alex, is he here? Because I don't see him on my list.
I think he is here, but he's on the phone.
Okay, all right. So can I have a motion to discuss?
This is Shannon. I move to discuss.
And a second?
Second.
Thank you so much. Michael, if you hear us, can you please give us your presentation?
Just a second. Alex, would you just note that Deb Dillingham has joined us?
Yes, thank you. Welcome, Deb.
Hi. You hear me?
Yep.
Yes.
Thank you.
Can I just ask one question? How do I see everybody on the screen?
Deb, on the top right of the picture screen, not the whole window, but just the picture screen. Oh, well, Antonio is actually going to change the view right now, so we'll do it later. I'll tell you later. Because right now he's going to present a document.
And I'm sorry, this is Mike Wright. Can you hear me?
We got you.
All right. And Antonio, you're going to control the slides, or do you want to kick it off? Nothing. All right.
Antonio, we can't hear you.
Sorry about that. I was muted and it changes the thing. So, Mike, you can go ahead and kick it off, and I'll add anything and control the slides.
Okay, so let's go to slide 2. And we had some discussion about this. The fact is there's been unprecedented market volatility, and as both Sandy and Antonio said early on, the fact that we have the investment book of record has been a huge help. In fact, I think when we were on a call with the Bureau of Asset Management the other day, we actually had better updated information than they had. So as you've heard from our various presentations on Casey, the fact that we can now get returns and net asset value and overall look at this asset allocation, and then the individual manager reports. We'll give a quick snapshot of each of those and try to move through it pretty quickly. But you should know that even with the large equity market drawdowns, we're still within policy ranges and we have not breached our basket clause constraints. And I think as trustees, with our most important duty here, which is to set the asset allocation for this fund, because that determines most of our risk and return, that fact that we're within policy ranges, that we haven't breached clauses, we'll show you the quick report card on that in a second. Here's the bad news. I mean, as of Friday, when we updated the market indicators, the broad Russell 3000, which is our benchmark for stocks, was down about 22%. Non-US stocks measured by EFA down 23%. Emerging markets 24%. So you can see all stocks kind of have moved in the same downward kind of together. High correlation, that's what we expect among stocks. The good news is low correlation. We diversify to bonds, and to all of the alternatives, our bonds are actually up slightly through Friday, up 2.7%. So we're getting some of that diversification that we expected from that. And if we were on a calendar year kind of plan, we would say that we basically gave back everything we made in calendar year 19. We're on a fiscal year. We still have some time to go here. I think the consensus among market makers is we've seen an unprecedented amount of volatility in a very short period of time. It looks like all of the 08, 09 kind of crisis happened all at once, but we have started to see some recovery now. And that last takeaway is also important then. Asset allocation is in line, and our net asset value at the last Friday was about $6 billion, down about about 0.9 billion, 900 million since the end of the year. We go to the next page, just a quick chart to indicate that takeaway, or leaving as a takeaway what that volatility has looked like. In prior meetings, we've talked about how the past couple of years, really since 09, have been lower volatility than expected. And here in the last, since February, really, we've seen an unprecedented amount of up and downs. That 13 out of the last 26 days, we saw moves of plus or minus 4%. Well, we expect kind of a 17% move for a whole year. And here, just less than a month worth of business days, we've seen more than that. The big item that we all can expect is going to help us, especially when we come out of the lockdown portion of this virus response, is the fact they're spending $2 trillion plus. And I think the good news of the way the $2 trillion is getting spent is they do list first that it's going to needy individuals. It's not just a business tax like the last $1 trillion that we spent. And that's really important for our portfolio. That means that there's going to be consumer spending coming out of this, and there's going to be recovery of businesses, restaurants, as they try to adjust to make up for the lost business. The next page just takes a look at how we're going to set up page 4. Just as we move through the performance evaluation, and there we go. The big question has been, when should we rebalance? And we have current ranges built in the existing policy statement. As you know, we've been going back and forth with the Bureau of Asset Management get our asset allocation finalized. We've been talking about it since our meeting offsite in January. They've now pushed back. We had the call last Thursday. Should we make some changes to our submitted strategic asset allocation? I've said no. We're a long-term investor. We know our cash flows based on what kind of information the plan actuary has given us. We know what our outlook is for the next 3 to 5 years. While this volatility has been unprecedented in terms of short timing, it hasn't really changed with our long not make any changes. We are looking to figure out how to rebalance and having discussions around rebalancing percentages of rebalancing should be. So the other question that we have with going on with between Antonio and Sandy and Tory Cove and us as general consultant is, should we keep our pacing plan for alternatives? Because what we don't want to happen is the public markets decline dramatically and suddenly that we're over allocated to the private markets where we have less ability to sell, and we don't want to sell in any kind of distressed mode. So what you see there on the slide is what our current pacing plan is, and I would say it's under review. But we're also got some individual investments that we're talking about that that keep us in line with this pacing plan, plus allow us the flexibility to change if we want to. So that's it. Let's just move in. We mentioned already that we're at about 6 billion of the total plan. You can see that the total in the top left corner of this chart. That's the amount, and then the fiscal quarter to date return down 12%, and got John's picture there over top of the fiscal year to date for me. I had to move him out of the way. The fiscal year to date return down 5.9%. So that's to my point that while the equity markets on a calendar year basis are down 20+%, our diversification, the fact that we have a different cutoff, makes us less dependent on those calendar year returns. And I think the other, and I think you've heard me say this before, it's never any great honor to say that we lost less. But it is, for a pension plan, important to say that our asset allocation, our diversification, and the specific investments we have give us a protection in some of these down markets that other more aggressive plans might not have. So we've down 5.9 when our pure index, and all index is down 6.5. Next page, I mentioned those takeaways of on the right-hand side. The important point to us as fiduciaries overlooking this plan is we have an investment policy. We adjust that investment policy for what we'll call them the placeholder assets, where we have to hold somewhat more in U.S. equities, for example, because we can't get up to our full allocation in private equity. So we have, we said before, being overweighted to U.S. equities helped us in 2019. It's hurting us a little bit now. That said, we're compliant not only with the existing policy, but with our new policy. And you see that in terms of the yes and yes over on the right-hand side. The only piece that's out of a line and we're addressing with BAM is the fixed income piece. You can see that we're underweight versus our, versus our current policy allocation, which is still in place. But we've talked with BAM already about selling off that long bond portfolio that got put into place. We think that rates have come down so far that it's time to lighten out of that core fixed income portfolio. And that's the specific discussion that we're having right now. On the next pages, we have some of the specific performance, and just this is just an emphasis that to show us two things. First, with the investment book of record, we can drill all the way down to the individual managers, look at their returns over the trailing year. We've presented this before in terms of those heat charts where we show how they're doing versus their benchmark. Here, we just wanted to show you that we have amazing transparency down to the manager level to say who's doing well and who's doing poorly. Do we need to rebalance at some kind of manager level? Do we need to have asset allocation discussion at the full asset class level? And what you can see here is in fact, we have a number of our emerging managers here with Aubrey and Essex and James Global Denali. And some of those managers are actually doing markedly better over the trailing year than those market characteristics that I gave you up front. I want to leave you with the message that, yes, we've had unprecedented volatility, but we're sticking to our investment policy guidelines. We're talking kind of weekly now with Bureau of Asset Management to make sure we balance appropriately and reset our balancing guidelines. And then as we drill down, and Antonio and Elise drill down on a daily basis, we have conversations about what's going on with the managers. While we don't make any short-term changes, we're not market timers, we're not hiring and firing managers in here. We're sticking to our long-term goal. But indeed, we're on very good track to be able to recover from this. There you go. I'll talk beyond that.
Hey, this is a quick question. How are we doing in relation to our other sister pension funds? Given the fact that we obviously diversified from our clients a little bit differently from them, but just interested to know how people in New York City.
Yeah. Here's one of the places where we have better information than they do. When we talk to Bureau of Asset Management, what we know is that we had better returns for them in 2019. So we had a margin of outperformance going into 2020, and now we're outperforming our benchmarks. I think the only system that we probably are lagging, you might remember that teachers actually put quite a bit in long duration bonds. And that position to be overweight to long duration bonds in fixed income was tremendous benefit when the Treasury and corporate bonds went to new lows. But based on what I know about the other systems, NICERs, and especially say police, I'm going to guess that we're ahead of them.
One thing, Mike and Gary, I'll add one thing is, the over the long term, right? We generally have taken the most equity risk of any of the plans, and so and I think our philosophy is that over the long term, that's where you want to be. But you will get some of those, kind of larger swings. And if we had a bit more core fixed income and in particular government bonds that like has, and then some of the other systems did, I think police and fire did add some to long duration, not as much as teachers, but they did. And so you're going to see that for us at certain times. But I think over the long term, being in growth assets is where we need to be to make sure we fulfill our promise, given the 7% return we're trying to hit.
And then just one other question. So what for you all would be a trigger, or just, how are you marching if we needed to do a rebalance? The major pieces that we should be looking at.
Yeah, we look at the major asset classes. So all of equities, all of fixed income, all of alternatives. And our recommendation to BAM and where we're operating now is to look at a 5% band around those major asset classes. And that's the part where we'll have to rebalance back toward equities to keep our risk orientation that we've had over the longer term. But that's our next move, to move back toward equities.
Thank you.
Any other questions?
Michael, it's Natalie. In terms of the private equity valuation, I've been reading various articles, how accurately are the private markets reflecting the volatility at this point? I guess what I was reading is they're not really accurately reflecting it.
That's right. I would have to say that's for private equity and for real estate. Either private equity or real estate mark to market on any kind of daily or even monthly basis. They're appraisal value assets. In real estate's case, it's the local brokers and entities on the ground going at it. And you can imagine that with people using less office space or not paying the rents, that's going to be problematic for real estate valuations. In private equity, while they have somewhat better handle on it because we can use a public market equivalent, the individual deals are not under valuation. And we've certainly seen, and Tori Cove could talk to this better than I, but we've certainly seen those expressions from the partners that we have that they will perhaps be cutting back on the amount of the drawdowns, and if they were scheduled to make payouts, we might not be getting them on the same pace.
One other thing I want to add, Natalie, is, and this is kind of a broader discussion as we start talking about benchmarking, is that how we try and handle that in the investment book of record and kind of flash reporting for you all right now is there's really two options. You could three options. You can use the public market equivalent, which will have an incredible amount of volatility. And so, that may be kind of correct, but it won't be reflected in any of the State Street numbers that you end up getting every quarter. You can do essentially zero, market at the last mark that they had for the prior quarter, or you can smooth out the returns over time, which would mean that in down markets, private equity won't be as bad. Each of those come with their drawbacks and their benefits. What we're handling right now is stable, but if anybody feels one way or the other, if it's no mark until we get quarterly numbers or using a PME, just know that each of those have their benefits and drawbacks. But it is something that we've been thinking about, and a lot of people handle it different ways.
Okay, are there any other questions for Michael? Okay, the next agenda investment items that belong in executive session. Can I have a motion to enter executive session?
Isaac.
And a second?
Isaac.
I didn't hear the second. Anybody catch that?
Isaac.
Peter.
Okay.
Whatever.
Okay, Alex, we're gonna call an in favor vote now.
Okay, John Maderick,
I approve. I'm in favor.
April Chapman,
I approve.
Deb Dillingham,
I approve.
Janelle Chacon,
Approve.
Gary Lennon,
Approved.
Isaac Carmignani,
Approved.
Lindsay Oates,
Approved.
Michael Kraft,
Approved. Approved.
Natalie Green Giles,
Approved.
Peter Calandrala,
Approved.
Shannon Waite,
Approved.
Vanessa Lang.
Approved.
Thank you.
Okay, there were no opposed and no abstentions, so the motion carries. Please turn the meeting off to the public. Alex, can you please report out the board's actions in executive session?
Certainly. During executive session, the board voted to approve two resolutions. Calendar item 22, authorization to approve to authorize the controller to commit a portion of the private equity portfolio of the retirement system, and calendar item 23, authorization of the controller to commit a portion of the private equity portfolio of the retirement system.
Thank you, Alex. Okay, that concludes the agenda for this meeting.
I don't
I
want
would
to
say,
close just yet. I do have a question for Sandy.
I'm here.
Yeah, so I know we started in the very, but I don't want to not sweep it under the rug. I do want to be sensitive to what's actually happening here in New York City. So I just wanted to hear from you a little bit, like, how is your staff actually doing in, in light of us transitioning to it being virtual? That's one. Overall, morale of the operations that we're having. And the second one is, you mentioned something on, are there any financial implications right now going forward that you could potentially foresee, given that we have a budget, that's obviously in place and you need to change your infrastructure? Is there anything that the board should be aware of? And I ask that because there's a lot of organizations that are just looking at their their finances right now. And, are you having to do that as well to see how you operate going forward?
So we are in the middle of our budget process right now. So I can't tell you definitively that it will dramatically impact that, but we will be talking about that over the next month or so. You can expect that you will see our budget probably not in April, given these repercussions, but we hope no later than May. Clearly, we have to rethink some of the things that we have that we were going to propose. I would remind the board that we are funded from the assets in the pool. We are largely independent of impacts from OMB or the general tax revenues of the city. Doesn't mean we're not affected by it, but we are somewhat immune. The fact that our budget is in the double-digit millions also protects us a little bit. We're quite small in the aspect of the great $92 to $5 billion that is the city in general. In terms of staff, I think I indicated that approximately 70% of our staff are actively engaged and productive. Staff is actually, the directors and leadership team are providing a weekly update of activities. We are maintaining the tracker system, which watches incoming documents and incoming transactions. We have adjusted our website to provide online fillable forms, can be presented to us via fax, via email. We are currently cut off from the mail systems, so there are postings on our website indicating this and requesting any filed documents come to us by fax or email. So we are doing what we can to adapt to this situation. We've seen retiree flows drop off. We haven't seen as great an increase in loan demand as we expected, but that may just be coming in the future. And as I indicated, we're working to communicate out with members. We have been sending emails to members. We are posting out using U.S. Post Office to send out a notice to members on changes and where payments can come. So we're working to push that information out as aggressively as we can. And I indicated we have had some problems with our call center, but I think we're getting a handle on that today, actually, major change. But ultimately, for 100% of our workforce to be productive remotely, we need additional equipment. I can tell you that it is on order. It is not clear we will get it before the pandemic panic subsides, but we will do what we can to assist them. And I would indicate that the guidelines that the city has provided to us on how we treat employees leaves us some flexibility in defining their activities. So it's hard to keep someone who must be at 65 Court Street employed, but we are doing that, and we're giving them remote work to keep them active and keep them employed. So, I would say we're trying to put the staff protected is not the word, productive and engaged as much as possible.
Thank you for that. I mean, I just want to honor that and just know that you have our support.
Thank you.
Does anybody have anything else? Okay. The next regular meeting of the Board of Education Retirement System Board of Trustees is scheduled for Wednesday, April 29th. Details to follow. Can I have a motion to adjourn?
Motion.
So moved.
Second?
Natalie, second.
Thank you. Alex, can you please call an in favor vote?
April Chapman.
In favor.
Thank you. Deborah Dillingham.
In favor.
Gary Lennon.
In favor.
Janelle Chacon.
In favor.
Isaac Carmignani.
Favor.
John Maderick.
In favor?
Lindsay Oates.
In favor.
Michael Kraft.
In favor.
Natalie Green Giles.
In favor.
Peter Calandrella.
In favor.
Shannon Waite.
In favor.
Vanessa Lang.
In favor.
Thank you so much. Being no opposed or abstentions, we are now adjourned. Good evening, everyone. Stay safe, and see you guys hopefully the end of April.
Thank you.
Yes.